Hey everyone, welcome to my YouTube channel. Dave Ganderel's here. This channel is created to show ways I'm generating streams of income online. My idea is what I'm doing. If it sounds interesting to you and you want to follow me, please consider subscribing, clicking the little bell, and liking the video. When we hit 2,000 subscribers, I'll be doing a crypto giveaway, so you'll want to get notified when we hit that goal. So in the video description, there's a couple important things. First off, there's timestamps on the video, so that in case you don't have time to watch the entire video, you can jump around and pick the different topics of interest to you. There's a list of different topics of the videos that you guys can comment in the video description area. Let me know what you want me to talk about. There's other opportunities that I'm involved in, generating streams of income right over here. And then there's ways to contact me. And then most importantly, there's a disclaimer basically making sure that you're aware that I'm not a financial advisor. None of this should be considered financial advice. It's my opinions, my thoughts on different topics that we talk about. And you should do your own research, do your own analysis, and most importantly, seek out financial advice with a proper credential person who can do that for you if you feel you need that type of advice. So again, my personal opinions, what I'm doing to generate, and my risk tolerance on the various things I'm doing. You guys have to decide for yourself. I'm just here to share information, educate you, maybe give you some skill sets on technical analysis and things like that, so that you can do your own at some point. As long as you practice on the charts for a while, you could become, just as good, if not better, than what I do. And I don't ever say that I'm an expert. I just know what I know, and I'm sharing what I know with you guys, and maybe you guys know more. If you know more, please comment in the video description area and let us know what your thoughts are compared to what I'm sharing with you guys. Alright, so we're going to talk about crypto. We haven't done that for a while. I did some preliminary analysis on these to kind of maybe make things a little faster, but you kind of lose the essence of creation of the technical analysis from scratch. So we're going to try this today. Give me some feedback on what your thoughts are. If you'd rather me go into the details, I'd rather do that anyway, because that's the way you learn better. But if you want to, the video has to make the video a little shorter. Maybe this is a way to do that. So we're going to go over Cardano, Bitcoin, Ethereum, Link, and then we're going to go over Polkadot as the fifth. So we're going to do 5 today. So look in the video description, jump ahead to whatever crypto you're interested in if you're not interested in all of them. We're going to start with Cardano. And like I said, I've done a couple initial things here to kind of lay the groundwork of the analysis. So the first thing, the most important thing for you guys to realize is that we are in a trading range. So Cardano's been bouncing back and forth between these levels, and the more that it bounces, this is basically creating a consolidation range. And when it finally breaks out, the longer it stays in here, it's getting coiled up, and it's going to move when it finally breaks out, either up or down. So we don't know which way it's going to go. If you want to just play the consolidation breakout, you want to buy when it goes above here, and you want to sell if it goes below here. And again, I'm more of a bull, so I wouldn't be looking for the sell, but I certainly, the momentum play out of this consolidation range, once it breaks higher, it has a way to go. And you could, enter a trade somewhere over here for the breakout and go higher. So that's one thing that you got to realize on a high time frame. That's one thing that's going on. So let's hide that. Now let's go and put this on here. Let's drop down to a lower time frame. So this is a pattern that's not actually completed yet. So this is a bearish pattern, but as I've talked about in my other videos, you can use the bearish pattern to see where price has to go to complete the pattern. So even though this overall pattern says that price is going to come down from D, in order for this pattern to complete, the price has to go to D first. So this is where we are right now at 1.29. So that says that it has to go to 1.489 or 1.49 basically. So you can use that to, you know, if you're playing the breakout, you know, well, on a higher time frame, the breakout's all the way up here, so you don't have a lot of room to play. But if you play a lower time frame breakout, like over here, between these two ranges, you know that you can at least maybe have a trade up to this level before you worry about it being bearish. So after you put this on the chart, the next thing you can do is you can put some pitchforks on the chart, right? I've talked about this before. There's the X to CD range that's kind of downward pointing right now. And then there's the XA, and then you got to kind of fit it, best fit scenario. You don't want to make it too steep, but you want to try to get as many touch points on here as you can, so you can kind of see where it's, you know, it came off the bottom, it hit the median line possibly already, and now it's kind of bouncing around in between these fib levels. So this is just kind of like a roadmap. You got to see if this is the pivot that's staying in place, then, you know, really you'd want to do something like this. But if it starts coming down, you just got to kind of track this line right here with the level of the price wherever it goes. And this other one is not really even complete yet, right? This isn't an actual formed pitchfork until it hits D. So this is just kind of like a roadmap of where things can go. I'm going to turn these off right now. Now, in terms of resistance levels, let's go back out to the daily time frame for that. Let's hide the pattern for a second, and let's bring in some levels. So based on some of the stuff I've done prior to this video to kind of help out, I've put in some levels of interest in terms of support and resistance. So, you know, this is the overall high. There's, you know, you can see some wicks here and some support and resistance here, another wick here, same thing down here. So all these levels are interesting levels, either support or resistance, depending on where the price action is. Like right now, it's breaking through this level, so this would be a support level. Right now, this is hopefully going to maintain a support level because it's been wicking down here before. So this, just because it's down here now, we're on a daily time frame. It has you know, another 20 hours to decide where it's going to go. Just because it's down here doesn't mean that it can't pull itself back higher. Let's put in some other. Let's see. I'm not sure where those are, but so these are the most immediate. So you kind of want to go a little bit higher than price action, a little bit lower. These are the areas of interest, either support or resistance lines. So you got to keep that in mind. Even though there's a pattern, and it says the pattern is going to go to a certain level, you might not get to that level because of a previous support or resistance level. So the smart traders will take some profits at those levels rather than waiting for that pattern to play out 100%. All right, so next thing we do, you can put this pattern back on. And now I've drawn some rectangular areas. Let's see, I forgot what's what here. All right, so that's the main one. So some of these on top are some targets. This is the buying area, and I'll show you based on basically the retracement of this pivot. So let's put on the. I think I have. I don't have. Well, basically, if you take the retracement from here to here, you can see that this DCA area that I put in here is between the 0.5 and the 0.65. Now, if you want to be really conservative, you wait for it to come down to 0.618 before you start buying. If you want to start building a position at 0.5, then you might want to do like a 20%, and do 5 buys, and at least you'll get some skin in the game if it doesn't go any lower. But if it goes lower, you can average your price down. And, you know, the 0.65 is the point of no return. If it doesn't bounce off the 0.65, it's most likely going to go more negative. Let's see what other triangles I got here. That's not needed. Resistance. Target. All right, so basically, you know, on a retrace, if it's a very bullish scenario, sometimes it doesn't go any lower than the 0.382. So, you know, you can see this resistance line here a little bit above the 0.382. You might see a bounce off of here. You know, I mean, depending on your risk tolerance, you might consider getting in a little bit here as well. But this golden pocket down here is really where you really want to wait, if you can, to get into a possible buy trade. And basically what I'm showing here is, you know, if you are in a trade or you're going to get into a trade, these are some areas up here where you're going to find some resistance. This is, you know, a previous resistance level here. You've seen, you know, a couple of peaks here, another wick here, another wick there. Now it turned into a little bit of support, a little bounced around inside there a little bit. So if you're in a trade, you might consider taking some money here. You might, you know, if D is going to play out and it's going to turn bearish after it completes, you might want to take some of your money out of the trade when it hits there. So if you get in down here, you know, you're going to have to fight through these levels on the way up. So if you get into a trade down here, you're going to have some resistance at this level, you're going to have some resistance at this level, you're going to have this one, you're going to have this one, then you're going to go up to X at the all-time high. And then finally, you know, based on the Fibonacci retracement, you know, the extension, this is an algo target. So, you know, these are all levels on the upside that you can consider scaling out of your position, and these are levels you could start scaling into a position. So that's really all I gotta say for Cardano right now. I'm going to turn this off to clean it up a little bit. I'll turn off, where is that, turn this off. So really you got levels here. You got, you know, on the upside, you got, you know, somewhere maybe in the 145 and then 149 maybe. You know, then of course you got this resistance level 155, and then finally you got the one like 160, 162. So those are the ranges, and you know, this would be the area that I would be looking to get into a trade. And you know, the ideal case it would be going higher. So that's really what I see. I mean, I guess there's some type of triangle possibly forming out here, but still TBD, right? You don't really know what's going to happen here, but you could kind of see maybe it'll come down into the DCA area based on this triangle. You know, this could be an area of support. You gotta see maybe it respects this trend line right here. You know, it doesn't go any lower. I mean, or you know, maybe it does go lower. You know, this is, you want to kind of touch as many as you can. So I would put it somewhere like that, and then just kind of see where this can go. I mean, it can go even like that. So you really don't know, but I mean, ideally, at the worst case, it's not going to go any lower than the 0.65. So this is probably how I would draw it. It just depends how fast this is going to happen. If it happens here, then you know this is going to look like that. But if it gets drawn out, you know the triangle is going to change a little bit. So you got to figure out. You got to kind of put it where it is and kind of tweak it along the way, and just consider, you know, getting into a trade down here and scaling out of the trade as it approaches these levels. All right, so that's it for Cardano. I didn't really save too much time there, but maybe I saved some drawing time. All right, so now we're on Bitcoin. Let's start seeing what I have here. This is the only bad part about doing it this way. I don't exactly remember what I did here. All right, so this is the pattern that's not complete as well. So if it completes, it's going to go up to D, right? And then if you put on the fib retrace from D, then you can kind of see, all right, it already broke through the point. Let's put some of these on here. All right, so basically assuming that it gets to D, I put a Fibonacci retracement, and Fibonacci retracement, you know, a lot of times the price will stop at 0.382, or it might go down to 0.5, between 0.5 and 0.665. So again, for me, I'd be waiting for this deep retracement to get in. But depending on your risk tolerance, and if you don't want to miss out on the push higher, you know, you can start at the 0.5. So I already have positions, so I'm not really anxious to buy more unless it's at a good discount. You could also see here we formed a, I don't know if I have it here. Did I draw? I think I might have. No. What I'm seeing real time with you guys though is a double top, right? Here's a double top, so it just broke basically the neckline, so it's probably going to come down into this area, which would be a good buying opportunity if you're looking to go long. And you know, if you get into a trade down here, these are some levels that you might want to consider getting out. You know, at the like 50, at this double top peak, which is basically like 59. Then you got another level at that D. If that D completes and this pattern completes, you got like 61, maybe 61.5 to be safe. Now you don't want to, like, somewhere in this range. These are all ranges. This is not a specific level, so you got to consider where you want to get out. And then finally, if it bounces off the 6.5 or the 6.1 or down here or wherever, this is the algo target. So it's saying Bitcoin could push higher up to 65, basically. You know, to be safe, 65. Round numbers are very psychological. So if you want to get out of a trade, you want to put it a little bit below a psychological level, because a lot of times price will just push back away from a psychological level. You could see maybe here, you know, it hit 59 and then it bounced back down. So, you know, you might want to take $100 off of it or something and get out a little bit before that. The spread on these things, depending on what broker you're on, could be $50. So, you know, a couple $100 lower than a psychological level would be a good way to think about getting out of a trade. So this is what I see on Bitcoin right now. You know, again, down here is a good area to consider averaging into a new position for the push higher. Ideally, we get to 65.2. But as you're going back higher, if you get down in, you know, you get out here, you get in down here, you know, if this is truly a trading position for Bitcoin, you might want to consider scaling out of it up here. You know, 25, 25, 25, and let the rest run. Again, this is saying that you're trading. If you're looking to dollar cost average and hold it long term, again, this is also a nice range to do that, but then you don't have to really worry about selling it. So it's all a matter of what you're doing. If you're looking to get in and get out of trades, then these are some levels you might want to take some profits. If it's a long-term hold, then, you know, just consider getting into here a little bit and just holding it longer term. All right, so that's it for Bitcoin. This is Ethereum. Ethereum's been going crazy. It's a little hard to do analysis on something that's gone so crazy. So there's very basic things we're going to do here. We're going to put in some support and resistance lines that I've did some analysis on prior. So again, I think I got them all. Yeah. So of course there's one up here now, right? Because it just created a new. I thought I had it there, but maybe I didn't. So there's one up here as well. So these are the areas of interest. I mean, this is basically a range. This isn't really, again, all these lines that I have here, I show them as lines, but they're really ranges. So the fact that these are so close to each other, you know, these are arranged. And this is a range. There's a range here, right? It's not a discrete line. You just remember that. When I show you these resistance lines, it's just to keep the chart from getting too cluttered. Because look, if you draw this, and you pull this to the left, right? You really want to kind of accommodate the wicks, right? So you want to do a little bit of a range, and then if you come back here further, you know, there's basically this range. Come back here. That was a consolidation area, so that's going to become support. So that's how you kind of figure out, you know, right now these are going to be supports. Resistance is up here because it's a sell zone. You know, little tight little sell zone. So you could do you could make this green if you want. All right. So I think I'm horizontal. I think I just redrew everything. All right. So those are some targets. So really on Ether right now, the only thing you can do is assume that maybe this was the bottom of the let's just go on a higher time frame to make it easier to visualize. So really with this big move higher, all you can really do now is take a pivot low, make the assumption that that might have been a local high, and wait now for a retracement to get in. So you can see how it bounced off of here a little bit, and it's a 0.236. And then down here I'm showing the 0.65, you know, 0.168 to 0.65, and then also the fact that this was resistance, right, between these two white lines. So this is the area, you know, the area you can consider, as we always say, dollar cost average, right? DCA area. So this is where I would be looking personally to put a new position in. I recently just got out of a position up here, so I'd be waiting for the retracement down to here before I'd get in again. I still have my long-term hold on here, so I'm not missing any runs higher, but if I'm doing a trade on this, I'm going to wait for the price to come back down into this golden pocket zone. And also, you know, you look at the golden pocket zone, but then you also got to look at the support and resistance range. So it kind of overlays, you know, there's a confluence here where the retracement of that levels are falling into a support zone. So if this comes down, there's going to be a pretty good support zone between the range where you want a dollar cost average into a position for the next push higher. Now if that plays out, again, you have the resistance levels from previous. So as it starts bouncing off of this range, you're going to have to deal with this level. You're going to have to deal with the previous all-time high, right? And then you also have the algo target from the retracement. So you have three levels. You know, this is going to turn into a sell level. The white lines are going to be the sell levels. You're going to have to deal with that. You're going to have to deal with that. You're going to have to deal with that. You're going to have to deal with this. So those are all levels. As you DCA into a position down here, you should be taking profits as it starts pushing higher. Again, on previous videos, I've drawn this. You know, if it bounces off here, you know, it's going to come up here. It's probably going to check. It's going to come up here. It's going to check. It's going to come up here. It's going to check, and then it's going to come up here. So each one of these levels are levels that you should be taking profits and moving your stop loss higher, right? So that's pretty simple for Ethereum. Again, I'm a buyer down in the 26.5 to 25 range, maybe 25.5 to 26.5. That's when I'm going to possibly consider getting back into a position for a trade, and then I'm going to look to get out. You know, possibly a little bit at 3,000, a little bit under 3,000, because that's another. Again, that's a psychological level. Then you got the 3,100. That's, you know, like a little pivot here. It's going to become possible support levels. So it's going to be resistance on the back when it goes back higher. Then of course you got the all-time high, you know, 3,500 or so, 34.5. Didn't get to 35. So somewhere before 35, I would be selling. And then finally up in this area, you know, and there's, you know, different levels here. On the low end, maybe 72.50 maybe. Somewhere cut the difference. I wouldn't sell at 38. Certainly, maybe 70. Yeah, maybe 35.50 or 37.50. So anyway, that's all I really got to say about Ethereum, because basically it's moved so much so fast that the only thing you could do right now, until another pattern starts forming on this chart, You know, in the lower levels, there's nothing here. All right, you're just having a little bit of a retracement, and we're going to see if this holds support. If not, we can start looking at the 0.5, you know, and 0.68, and then finally this support zone from these two resistance lines to get into a trade. It looks like right now it's pushing higher, so it may never come down this low. Either way, this is an algo target based on this pivot. So wherever this price action stops, maybe it stops at the moving average. Maybe it stops at 382. There's some confluence there, right? The average is there. There's a fib line there, and maybe it doesn't go any lower than here, and it pushes back higher again. We don't know. All we can do is sit back, maybe look for a pattern to start forming here, or take educated guesses and trades. Not guess, but educated high probable trades based on maybe a bounce off this moving average. You know, or wait for it to come down into this golden pocket, which is also a range of support right here. Personally, I would be waiting. I'd be waiting for 26.5 to get in, personally. All right, so that's it for Ethereum. Let's go on to Link. Chainlink is crazy, right? You can see a little M right here. Actually, before we do anything, yeah, that's what I want to show you. I want to show you, so right now we're in a formation of a double top, which is also considered an M, just like here. There was an M, neckline, broke down. Here's another M that's forming right now. Now, if it starts coming down, if it breaks this level right here, it could be going lower. So what I drew here for you guys, real quick, is just a visualization of the M, right? And then, I don't know if let's put in the support and resistance lines. Okay, so yeah, so this is the support line that also coincides with the M. So if price action comes below 31.8, it's going to go lower. And I think I thought I had another line here. Maybe this one? Yeah. So this right here is basically me showing where this can go based on this, you know, breakout. This is where the target of this pattern can tell us that it might go down to. And it kind of coincides to a previous support line here. So let's put in, did I put in all the trend lines? Oh, support lines. Let's put in all the resistance and support lines that I figured out prior. So again, these are ranges. These aren't exact line numbers, but these are all interesting levels that we're going to have to worry about. It could drop down a little bit lower if you want to look at a lower time frame. But this is where price action is. This is the immediate on the upside, and these are some areas on the downside. I think I put in, yeah, there's a little mini triangle kind of forming here. And we got a little bit of a fake out here, but it seems to be holding this this trend line down here. So, you know, once it finally breaks out, I personally wouldn't. I'd play the breakout above the all-time high here. Actually, I don't know if it's an all-time high. Is it the all-time high? I guess it is. All right, so that is the all-time high. So I would be, even though there's a triangle down here, I wouldn't be a buyer until it broke out and then checked. Like, I'd be waiting for this to happen. Even though it's a fake out, I'd be waiting for it to break above, check, and then go. And then I would be entering a trade somewhere over here. Let's see what else we got here. Okay, so I drew a pitchfork based on there's a pattern down at the lower time frame. So there's a pitchfork higher, and then there's a pitchfork even higher. So it's good news for Link. I mean, it's all looking positive to Link. Again, this is a big zone right here. You know, a lot of stuff going on up here. So it's going to be a lot of congestion. But from now where you are here, 39.8, you know, you can very easily see it to 41 before you start hitting some concerns. So I'm going to hide the pitchforks. What else do I have to turn on? Do I have to turn on anything else? I don't remember what that is. Alright, so yeah. That's really all I got to say even about Link. I mean, unfortunately we have a M pattern forming, which is not a good thing. You know, you could see it better on the 4 hour. You do have an M forming here, right? You got this, you got that, boom, boom. So it could be going, you know, it could be a negative thing here, but all signs are pointing for Link to go higher. I don't remember. Let's see here. Where did I get that target from? I think it might have just been a Fibonacci. Here's the disadvantage of doing this prior. I'm looking at different charts and then I forget where I am with things. This might have been okay, maybe from here to here. So I might have taken the pivots. So let's take a look here. Fibonacci extension. You go from here to here to this retracement. Alright, so that's where I got these zones. Fibonacci retracement. So I pivot low, pivot high, retracement, and 1 to 1, like if from this bottom to this top, if it does from the bottom to, if you want to do a minimum, it's going to hit here, 1 to 1, right? But a lot of times this seems to be the zone that price goes to, the 1.414 to 1.618. So you got a couple areas here, you know, basically $50 and basically like $60. Those are the two targets based on, oh, hold on one second, let me go and take care of that. So again, that's what I basically see. I took care of the battery problem here. On the downside, I could see levels down here. If it breaks down below this neckline, got the target pattern down there. And if you could look back, there's some resistance levels here. So it's kind of coinciding with this negative 236. So Fibonacci on the upside, and then there's also the algos that are trying to push it down. So the pattern tells it can go down to here, but you might see some resistance here. If you're taking a short, you might want to consider getting out here. You could certainly, you know, get out at the pattern target, which coinciding a little bit with that wick and that support, and there's some zones there, and then there's some more down here. So here's 3 on the downside if you're playing this M double top, and then on the upside you got the ones that we talked about already. Alright, so that's it for Link. And then finally DOT. This is one that I'm looking to get into. Haven't jumped in yet. I want to wait for it to pull back a little bit more. So let's just look at a couple things. First thing you can look at, just like everything else else is moving so much that, you know, you could just basically just fall back to the basics and look at a Fibonacci retracement. And then if you start putting in some zones, you can kind of see where price is, where it might bounce. Look left, there's some there's some support there, right? Come over here. You can see, see how it falls. You look left and you can see where things are. Did I put some lines here? So here's some resistance and support lines. there is a pattern here, and basically the pattern saying the price is going to have to go lower to complete this pattern. And once it completes, it's going to be positive, but it's basically saying that it might have to go as low as 30 to complete this pattern. So this is for me, this is what I'm looking for. I'm looking for it to come down here into this area, or even worst case 786, which is lining up to the D, and somewhere in this area is where I would be purchasing. I'm gonna buy maybe 20%, 20%. We don't know how low it'll go. It might stop at 0.5, it might stop at 0.55, it might stop at 0.618. All you can do is you can average into a position, maybe do 20%, 5 buys, or 10%, 10 buys, however you want to do it. Average your price into a position down here, and then again, this is the immediate target up here. Based on this Fibonacci retracement, this is one of the targets up here. And then you could do the ABCD extension. I believe that I have that in here. Let's get rid of the fib retrace. Fib extension. So if you go from the bottom to the high and you assume that it's stopping at here, if this was the range that it stopped at, then we're looking at a 1-to-1. It can come up to here. AB is equal to CD. So depending on how low it goes, if it stops here, this is kind of where it can go. If it goes lower, then there's a different set of ranges. But let's just assume that it's gonna be kind of a bullish market. So maybe it's going to be strong, maybe it's not going to go as low. Now again, if it decides to go lower, if it goes down to the 618, let's put the fib on here again so I can get it. If it goes down to the 618, now we're talking about levels up here. So I guess you could do a range, and then over here, unfortunately, it's going to be lower, right? It's not going to be. Oh. So it doesn't help, but you have to see where it goes. If it stops here, then we know the first set of ranges that I put up there is where it's going to be. If not, then the second set that I'm showing here, you got to just move this down to wherever that final pivot is. And once you lock that in, if it goes all the way down to here, or goes here, stops here, then you could figure out your one level and the range between these two levels. So it's kind of like undecided yet because we don't know the locked in. All we could do is what's real, and what's real is right here. So what's real right here, meaning that this is not possible yet because it didn't retrace deeper, and this is not possible yet because it didn't retrace deeper. So right now, based on this pivot, if it holds, you can look at basically a $45 dot, or a range somewhere. If you want to cut the difference, it's probably around $50. So that's what it's looking at now if this was the bottom, right? If it goes deeper, like I said, if it goes deeper, let's put on the fib retrace again. If it actually goes down lower to this range, I'm not going to put the ranges up, but let's just look at the extension. So if it really goes down to 0.65, then we're looking at a 42.25, 1-to-1. And if it goes up to 618, then we're looking at like a 48.5, right? So you see how the targets come down a little bit depending on how deep the retrace is. Now right now, you're also hoping that let's get rid of some of this stuff. One other thing you could see here is when I take some of this stuff off, I mean, you can also consider, Elliott wave, right? And if you go from here to the retrace, and then up here, assume that that's good, it's still abiding by it. You have that as well. Or the 5, we got to figure out where the 5 is. And by doing the fib extension from the start to 3 to the retrace, it also puts us at the $50. Just a different way of doing it, but this basically is saying that the Elliott wave, 0 to 1 has to be, 0 to 1, and 2 to 3 have to be at least 1 to 1. It's not, 2 to 3 can't be any shorter than 0 to 1. And based on that, you got the different folks that think, 1 to 1. You want to be very conservative, you go 1 to 1. Now, again, if you really want to take some targets, maybe you even get out at the previous high, because it could become a double top. And then finally, if you want to leave some on the table, you can wait for it to hit 50. So you got some decent ranges here. You could take some profits here at 1. You could take some profits at this previous all-time high, or you could take some profits at 50 and then leave the rest. So there's 3 levels that you can get out, maybe 25% each, and leave the 25% for it to run even further. And just move your stop loss up like I've talked about in all my videos. So again, I'm looking to get in when it retraces down 65%. So let me hide this. Let me hide. Where's the other one? Let me hide that. And again, just to keep it very clean, I'm looking to get into a Polkadot position down in here. So somewhere between the 31 and 32 range, basically 32 to 33. Yeah, so basically somewhere between 32 and 33. I'm hoping that it retraces down to there before it starts pushing higher again, and I'll get into a position down there. So I'm going to be averaging in between 0.5 and 0.65. So that's when I'm going to start getting in. So when it goes below 34 into the low 33s, 33.25 maybe, I'll start getting into a position. Alright guys, that's it. The video was not much faster, so maybe I'll just go back to the way I used to do things, because I didn't really save too much time. I wasted time trying to figure out what I drew previously to try to save time. Anyway, I hope you liked the video. Consider subscribing to my channel. When we hit 2,000 subscribers, we're going to do a crypto giveaway. Click the little bell so you can be alerted when that video comes out. Please share this with others so that we can grow the subscriber base. Like I said, if you're interested in creating streams of income, creating wealth, consider subscribing to my channel. Look at the other opportunities I'm involved in, and other videos on my channel. If you're interested, reach out to me. I'll assist you on getting started and give you the roadmap to start creating some streams of income for yourself. Take care and look for my next video.